Libra could cause a wave of ultra regulations for cryptocurrency. For those of you who are new to crypto or operating inside the crypto marketplace and are blissfully unaware, Facebook is launching a cryptocurrency supposedly next year called Libra. I say supposedly as there still hasn't been any kind of official release date, and the actual currency itself is still in its infancy, especially around the details of application and functionality. We do know a little about Libra, however, and if you want to get up to speed with that, I highly recommend you check out the video Bitcoin versus Libra that we have on our YouTube channel, which highlights the big differences between the two cryptos. For now, we're going to address the big elephant in the room. The world at large doesn't want Libra, and nor does the cryptocurrency market. Libra could be a recipe for crypto disaster. Libra entering the marketplace is already drawing harsh criticism. Donald Trump, who is notoriously unkind about cryptos in general, has taken exception to Facebook launching a cryptocurrency, and has categorically said that if Facebook wants to create a currency, then it needs to adhere to the same regulations that the banks do. Banking regulations are now incredibly tight, following from the recession back in 2007-2008, and it remains to be seen whether a company like Facebook will be able to adapt its model to fit the regulatory framework of a bank. Banks also need to prove liquidity and solvency, which Facebook should have no issue in doing. Regulations could spill over. The real problem occurs when the regulators of Libra start looking at the crypto market as a whole. The expression, "what's good for the goose is good for the gander," comes to mind, and it could well be the regulators seek to impose the same strict codes of conduct on other cryptos in the marketplace. Now, solvency is going to be a major issue for most cryptocurrencies if this is a type of regulation that is going to be brought in. Now, what is solvency? Solvency is basically an institution having a pot of money that shows that in the event of an emergency, they can maintain the business model and mitigate risk. In the EU, there are strict directives which form a larger regulatory framework for banking that go a bit further than US regulators. Most cryptos will not have enough quote-unquote money in the bank to prove solvency, as most cryptos use the asset of the token itself as a financial mechanism. As the market is so volatile, token prices would be too erratic to form any risk mitigation on. Asset-backed cryptos. Strangely, asset-backed cryptos might well be the solution to the regulatory headache that is almost certain to ensure to some degree. I go into it a bit more detail about asset-based cryptos in another video that we have on the channel, which I highly recommend you checking out. But for the purposes of wrapping this video up, asset-backed cryptos have a central pot of reserves, or aka assets, which would go a long way to appeasing the demands of regulators. It is almost certain that Libra is going to take the world by storm, and it is even more certain that Libra is going to disrupt the crypto marketplace. Hopefully, it makes a positive impact rather than a negative one. If you're interested to see more videos like this, we come out with these videos multiple times a week. Make sure to subscribe and hit a notification bell, and I want to know what you think about Libra. So leave a comment down below and share your thoughts about what you think about Libra and whether or not it's going to be good for the cryptocurrency market or not. Having said that, this has been Iman Shafi. See everyone in tomorrow's video.